Joining us right now to talk about everything we're seeing is Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we asked you about a lot of different things. I think maybe your point on the resiliency of the markets right now may be the most important that we haven't spent a lot of time talking about.
Well, it's a double-edged sword, though. So right now we're seeing a surprising, and that's the word I think is important, amount of resilience in both the economy and markets. And it's confounding a lot of experts. I spoke to 2 or 3 economists I really respect yesterday in anticipation of coming on here today, and they really couldn't explain it because of the following. And I'm going to tell a little story here. If the 3 of us 4 years ago today had been having a cup of coffee, and into the room walked a prophet, or an authentic prophet, who said, let me tell you what's going to be happening 4 years from today. There are going to be wars raging between Israel and Iran, and between Russia and Ukraine. A powerful new regime of tariffs on imports will have been installed by the United States. There'll be mass deportations occurring and large public protests over that. What do you think the impact of those will be on the then economy, on the then markets? I think most of us would have said, well, not very good. And so at the moment, that not very good impact has not materialized. But I think there's a pretty serious chance it's the calm before the storm, and that the resilience will not last. And here's why. First of all, we're starting to see beginning signs of weakness. You see that in retail sales, industrial production, continuing claims, home builder sentiment, and actual new home starts. And by the way, that's why yields, in my view, are down. I think there was a lot of anticipatory behavior by consumers and businesses around the tariffs, inventory stockpiling, advanced purchasing by consumers, and so forth, which meant that the impacts of the tariffs were delayed. And so, and then you see just U.S. GDP forecasts at the beginning of the year, January 1, all in the 2s. Now, right around 1%, whatever forecast you want, Goldman Sachs, World Bank, and so forth. And so I think, yes, we have seen a stunning level of resilience, but I think the prospects that it lasts are low.
The pullback that we saw when tariffs were first announced, that were much larger than had been anticipated, you know, the markets have come back from that, I think, probably on the assumption that the tariffs will not be quite as bad, that there will be some negotiations that take place between now and then. You think that's the case?
Yes. But I think the tariffs are just one level of this picture. But I mean, just ask yourself, if any of the 3 of us are average consumers and we're seeing all this news, it's going to cause us to be hesitant. And the same with businesses on capital spending and other expansion plans, and the same with hiring. And I think that's about to begin to show up.
Although the war between Ukraine and Russia has been going on for years at this point.
Yes, but it's an overall impact. Now, you know, I'd like to be wrong, and the market, you know, as we all know, is right around an all-time high. Although if you strip out the Magnificent Seven, it's lower. And obviously, a big thesis there is we're in the earliest stages of a revolution in terms of AI that will rival the Industrial Revolution and so forth. I have no reason to question that. But I think the resilience we've seen so far is unlikely to maintain itself as surprising as it has been. You know,
Roger, at the beginning, before tariffs, you could talk to business people, and they were ecstatic about a lot of stuff, a lot of tailwinds, right. Whether it's deregulation or certainty about taxes.
Tax bill.
Or, I mean, just go down, you know, lower oil prices if that were, now, obviously, we've got a war going on. But there were a lot of things. The other day, I know you saw this, real wages for hourly workers up 2% in the first 5 months. That's the strongest growth in 60 years. Inflation, even with tariffs, is low. You could be wrong. You admitted that. It could be that some of those tailwinds are more than enough to offset the tariff, which may or may not finally, the worst case scenario might not happen with tariffs.
And you're right, because if you look at the basic unemployment data, what's really going on, I think, is that employment itself remains solid, and therefore consumers have a solid amounts to spend,
right.
And so far have been, I said there's been some weakness showing up now, but until very recently have been doing so. And so you have to take a close look at, we're about to see another continuing claims number.
Yeah.
And we'll have to, but I mean, you see.
And we got it today, actually, because tomorrow's Juneteenth.
Say that again?
The jobless claims. We got it today because tomorrow's Juneteenth.
Okay.
Yeah.
We'll see.
I was going to ask you something. And the wealth effect. The wealth effect for consumers. The markets, if you didn't sell, you're basically.
That's right.
The person that came back after was if you went to Mars and came back, 4 months later, the market's right where it was.
That's true.
Yeah.
I find that a little puzzling, but
yeah.
I have a lifelong history of being wrong on
the
markets.
deportations, Roger. I think it's a fraction of what the Biden administration, what they were doing, and a fraction of what Obama was deporting.
Well, the Biden
right?
administration was totally asleep when it came to this.
They were deporting. They were just deporting the people. They were letting. It was like it was like a bucket with in a boat with a bunch of holes in it.
That was
yeah.
the level of malpractice.
But Obama deported a lot of people.
He did.
A lot more than Trump. 10 times as many.
I'm just saying. What I'm trying to say is, there's a confluence of huge events.
Yeah.
Huge events.
But even the Iran, that could be. We had Steve Eisman yesterday talking about how positive, if something does come out of this with Israel and Iran, and the whole Middle East has a shift.
He wasn't saying that.
Talking about the whole Middle East.
But he wasn't necessarily saying the markets would go up.
Not the markets,
the antithesis of what would happen if something bad had come out of it.
But for the world, it could be in terms of finally putting this to rest.
Let me put it another way.
Thorn in our side since 1979.
If we sail right through this the way we have so far in terms of what I call resilience, I just think it'll be amazing because there is such a confluence of destabilizing events that typically cause consumers to hesitate, cause businesses to hesitate. And so far, we've seen a little evidence of it, but not much. I happen to think we're going to see more, but maybe I'm wrong.
Are you seeing that hesitation in your business, the business you do with M&A and other things?
Well, the M&A environment has been okay, but not booming for some time. Last year was not a great year. This year is somewhat better. I'm happy to say that we are doing quite well ourselves, but there's a lot of pent up interest, demand. And the last 2 or 3 weeks, you've seen quite a few announcements. Dollar volume year over year globally is up,
sure.
But it's not booming.
Okay.
And I think if the clouds part and the sun comes out in terms of all these events we're talking about, there probably will be a big upsurge.